live. Yeah. And we are live. Welcome, everyone. Thanks for joining for another Fibonacci talk. Today's talk with Javier. We will talk about technical analysis, Javier's trading style, traders' mistakes, and how to try to avoid them, mental side of trading, and more. Javier, welcome to the show, my friend.
Thank you, Tamir. Thank you for inviting me. I'm very humbled that you've invited me to join you here. I look forward to speaking with you. I love your charts. I love your Twitter, and certainly appreciate it.
So let's talk about how you get formal with the stock market. What gets you interested in the markets?
Yes, that's a good question. I think my journey started like a lot of the young traders recently that joined within the past 2 years. I became interested when I noticed that a lot of my friends were trading options during the COVID recovery, and it seemed like they were easily making money. And I thought, if they can do it, why not them? Why not me? I was always intimidated by the stock market growing up. I thought it was scary and challenging and difficult to understand. And sure enough, it is true. It is not easy. It is one of the more difficult things I've tried to do, but it's been very rewarding. So yeah, it's just been about 2 years in the market. I think that, at least from what I've observed in positions that I've taken on at work as a software developer, it takes people at least a good 2 years to even start getting remotely good at something. So I feel like I'm just barely starting to, become dangerous at this. Very new to it. I would say my strengths are charting, but not execution yet. And so yeah, that's how I got started. Is just seeing everybody else making a lot of money and me wanting to kind of join and join the party that was happening in 2020.
Yeah, yeah. Well, post COVID, after April and March of 2020, everybody were a good traders. Wherever you put your buck, you made another extra $3 or $4. It was a crazy time. Everybody were perfect traders. Everybody had the best strategy to trade options and stocks and commodities and wherever. Yeah.
You're absolutely
So,
right.
would you mind talk about your personal life, what you do outside trading, or?
Yes. Yes. So I'm 35. I've studied engineering. That's what I went to school for, mechanical engineering. I got a bachelor's degree in mechanical engineering, and then I got a master's degree in mechanical engineering as a full-time engineer. I've been an engineer since 2011. So this whole trading thing is just something that I do on the side for fun, that's supplemental. Maybe one day I become really good at it, and I can do this enough to where it seriously impacts my finances, and I can maybe do it for a living, maybe not, who knows. But even if I don't, I really enjoy it, even as a supplement. It's just, I think it's good for people to have multiple sources of income, and why not have this that, fun and challenging. It's rewarding for the technical side of my brain, the engineer side of my brain. It's fun to try to, predict movements and position yourself in places to turn a dollar into $2. So
Yeah,
that's pretty much
sounds
my
great.
background.
Sounds great. So let's talk about your trading style, how you see the charts. If you want to share your screen and just go over it, let me see how
Yes. I think you may just have
yeah,
to enable me to screen
yeah,
share.
screen your
All right.
screen.
All right. So at first, I'll just kind of generally describe my trading style, and I'll show some of the indicators that I use. But are you able to see my screen, Tamir?
Yeah,
Okay, cool. Right now, I just have futures up, ES, and it looks like we've gapped up to 3,800, and we're currently rejecting there. But before speaking about the charts, I'm primarily a common swing trader that I prefer to buy things at support levels when they're showing signs of reversals on the lower time frame. Uh, I like to see time frame continuity, at least from weekly level to the daily level, before I even look at the lower time frame, like a 5 minute for precise entries. Per my own trading style, I'm only right about 35% of the time, which may seem very low, but I've seen a lot of other professional traders that have a very similar percentage. And the beauty of it is that you don't have to be right every time to make money. You just have to have a good risk reward and implement a system that you're only taking trades that are high enough in the risk reward ratio for your batting average to, in the end, make money. And so for me, I try to look for things that are a 3-to-1 risk reward ratio. And that's why it's important for me personally, for my own emotions, to buy near support levels, because you'll know very quickly if you're wrong, and you can get out of a trade without losing too much money if you're buying in a good spot.
Yeah.
Unfortunately, through my broker, I can only trade commons long. Therefore, if I do want to trade the short side, I have to do so via ETFs or via my smaller option account via puts, which is fine with me. It'd be fun to trade the short side, and maybe one day I'll switch brokers so that I can do that with commons. But for now, it suits me. Either way, I mean, I can still participate
Yeah.
to the short side. I just can't do it directly with names. I do trade options occasionally in a smaller account, but it's not my primary focus. My larger account is the commons one. I consider myself more of a can slim type long commons trader, but I will dabble in options. I kind of view it as a way to kind of scratch my, the itch of bigger gains, kind of the gambler itch, even though you shouldn't use gamblers when you're describing your trading style. But I know that if I want to take something on that's a little bit more risky, I'll do this with a few calls, a few puts in a small account, and you know, you'll kind of satisfy that itch without having to take on big risks on a big account if it's not your primary style. And those friends that I told you about that were making a lot of money during the COVID recovery, well, they love to trade these weekly options, and I'm in a chat group with them on WhatsApp. We talk with each other all day about setups here or there, and so it's kind of my way to be able to participate with them, this smaller options account, but primarily commons.
Yeah. Sounds good.
And let's see, so like I guess I could describe some of the indicators that I like to use since we have the chart here. I like to use the 9 and the 21 EMA, the moving averages, for shorter moves, and the 50 and 200 SMA for larger moves on the daily for the most part. And that's just something that I learned from many traders that like to use the same moving averages. I started following a guy named Tanner charting options early on, and that's the suite that he chose, and so I kind of followed in his path, and a lot of other people have as well. Also, anchored VWAPs, something that Brian Shannon developed, or something that I really like employing. So you put that somewhere like at a swing high here, you put an anchor VWAP, and you could see where bulls or bears are winning and where they're meeting certain resistances. Volume profile as well is something else that I like to use. This is not a good example, but yeah, you can look for things like volume gaps where price can move quickly through there. So that's why I like using volume profile, or I can see like places where I'm expecting resistance levels, supports and resistance levels from pivots like here, or sloped trend lines like down here.
Yeah.
Fibonacci levels. I know that you like using Fibonacci levels, so you know them much better than I
No, I
do.
don't know what's Fibonacci. I don't know how to use them. I don't know. I don't know
But I looked it up in the dictionary, and you had your face on there. I don't know, man. There was a mistake somewhere.
Yeah.
So I love those Fibonacci levels, especially for when we're going into uncharted territory where I have to extrapolate a move where I'm kind of trying to estimate, where am I going to meet a certain target? Or I like whenever we're pulling back, and if I don't have any obvious pivot levels or volume profile nodes, or even if I do, I'll still use Fibonacci's for a confluence so that I can add the extra confluence to what I'm seeing, like looking for when we have big moves. I like for looking for like a 50% retracement. So a lot of times you'll see a bounce there or 0.618. Um, Also,
Yeah,
this is not really an
I
indicator
wonder
per se.
why. Wonder why it's going to the 618 level and then you see some doji and a reversal.
Yep.
I always wonder how to use this Fibonacci.
I would follow a guy named Tamir. He'll teach you. And then also, it's not an indicator per se, but I do want to mention that I do like looking at option flow as well. I think it
Yeah,
it gives you a good like heartbeat into the market. You can, if you've watched flow a lot, you'll see if big money is pouring in or pouring out, or you'll see where they're positioning themselves, or you'll sometimes see where players are positioning themselves somewhere ahead of news. And so I don't follow it blindly per se, although you could if you were good enough at it. I just haven't learned it enough to do that, but I'm following it to use it in confluence with my technical analysis of the charts.
yeah. Yeah, well,
And
this is the beauty
then, yep.
of trading and technical analysis, that there is, people need to understand that there is no right or wrong. Everything is right and everything can be also wrong. It depends on how you fit the information and all the indicators and everything that surrounds us, how you fit it to your own style, because this is what it's all about, what works for you. Because in the end of the day, what works for you will probably will not work for me, and what works for me probably will not work for you. Everybody needs to do their own small tweaking in everything they see and everyone they follow. So this is the beauty of trading in general and technical analysis in particular. So yeah, this is my take from everything.
Yes, absolutely. You're absolutely right. I react differently to certain uh data coming at me than you would. I'm emotionally different than you and other traders. I don't like seeing red, so I may get out of moves quickly. So that may mean that a certain trading style doesn't suit me. I may be busy or at because I work full time in software programming, so I can't be around to day trade a weekly option like somebody else could. So, like you said, everybody's different. It's has a different style that they have to find so that suits them.
Yeah, yeah.
Totally agree.
Yeah, so can you walk us through, let's say it's my Monday and I can see the future, and I can see the Bitcoin, for example, is already breaking out, but
Hmm.
you're in the past, so your Monday is tomorrow. Can you walk us through how you prepare for a trading week, how you assemble your watch list for the upcoming week, and what's your process?
Yes, good question. So my weekend routine and building a weekly list is I review all of the stocks in my watch list and my focus list. So I have three main lists. One is my universe list. It has all names that I will ever look at. And then under that, the next level is my watch list. That's a larger universe list, that things that look interesting, long or short, but they may not be ready yet. And then finally, I have my much smaller focus list. That's what I want to look at during the week, during the day, that is ready to move within the next few days. That is my primary focus because I want to be focusing on few amount of setups so that I can make precise entries and not be overwhelmed with too much data. uh, so those are the three things that I'm focusing on, how to curate these three lists. And so I'll review my stocks in my watch list and my focus list, and I'll remove anything from one or the other. If something this last week looked like it was ready and it was on the focus list, but it made a move in a direction that was not where I was intending for it to go, then I'll move it back to my watch list. It got downgraded, it got relegated. And then if something is on my watch list and it's getting closer to being set up, it gets moved to my focus list. And then after that, I'll scan through my entire universe list. And so this is kind of time consuming. I don't advocate that everybody do this. I like doing this because I love looking at charts, and I can go through them very quickly. Some people may prefer to just use scans, right? You don't want to go through hundreds of charts. You want to do it something quickly, but I don't mind it. I feel like I've heard other traders say the same. They feel like they get the best heartbeat on the market by going through their entire universe list every weekend, or maybe even more more frequently than that, so that they're aware of like what sectors are setting up. I saw a lot of, steel, or a lot of oil, or a lot of energy setting up. So I know that I need to focus on that sector. So I like doing that. I'll go through it all. And of course, when I'm going through that, I'm adding things to my watch list or my focus list as needed. And also, I do leverage Twitter, and I'll scroll through Twitter as I'm on Twitter at any time. I'm looking through it, and if you post a watch list, or you post a setup list, or some other traders that I trust post their watch list for the week, and if I'll compare them to my own, and if I'm not looking at some of those names, and I'll look at the charts and see if I see anything that fits my style. So I love leveraging Twitter for that. I mean, it's amazing that in 2022 you have so many really intelligent, smart people willing to freely share their work for you. We're very lucky in that respect. People post a lot of great watch lists.
I think Twitter is the best news site for everything, in my opinion, because it's direct, no noise, no nothing. This is why I Twitter is the only site that is open for everything, for me, news, the stock market, everything. So let's just get an example. If you can just take us for one example or two examples of how you zoom in from the weekly watch list. Let's say, what are your top watch list names for tomorrow? Let's go through your process, like very in depth. Let's take one name and
Okay, I think I'll scroll through my focus list then, since more than likely that's going to be what I'm looking forward to this next week. So I will remove volume profile because I don't have it always there from the get-go. I'll start from number 1. So AEHR, this one, I have it on my focus list because I have been tracking it from down lower. It's already made the move that I was looking for and more. I just have it here because I think it's a very strong stock, and I think that you could still have an opportunity for entering if you would like to enter against this pivot level. So, here I could maybe see if we're going to do something like this. There. Oh, I deleted it. Sorry. So that's on my watch list because of that. It's not because it's fresh. This is where I spotted it first. That's where I should have, that's the best entry. You're near support. You're only, you could put a stop level at the bottom here, and you've got a 2 to 3 to 6 reward ratio. A lot of green, quickly stopped out. That's what you want to see. Up here, it's a little bit riskier. It's already made a big move. It's got a gap. So it's not a primary focus, but it's still on there for a potential setup. BSM, another one that made it here because it's tightened up here above this pivot. I like that. And so potentially I could look into entering down here to see if we make a move past the pivot. It's a bit of a slower mover though. I'd prefer to ride a higher beta name. Here we've got a biotech name. I don't love the action, but I do love the moving averages. They're compressed, they're near each other. It's near a pivot, high volume. Some of these, I'm going to put the earnings indicator. Some of these, like this one, earnings, what is it, Monday? I'm not going to get in on it before earnings. Maybe I look at it because I've loved it before earnings. Maybe it makes a move. Maybe it gaps up at earnings. comes down at the initial sell-off, and you can get on for the ride after that.
So
CCRN.
what's your take about moving into a position and taking a position after a gap up or a gap down after earnings? Do you
Yes,
take
that's a good
today or
question.
no?
Let me see if there's one here that recently made a move that could be a good example, so we can look at one. I know there hasn't been any recent earnings, but maybe there's been a big move in some of these names. Let's just pretend. I mean, I can't find one as a good example, but what I would look for with an earnings gap up.
You can
I
put up
would. Which one?
Netflix.
Oh yeah, good idea. Yeah, good idea. Okay. So Netflix, you would know from the get-go that pre-market we've gapped up. Everybody saw earnings the previous day. We knew we were going to be gapped up. So at that point, I'm going to pull up. Okay, I'll leave my daily here on the left, and on the right, I'm going to go. Let's start with a 3-minute. And on the lower time frame, I'm not really looking at other moving averages besides the 9 EMA, because I'm just looking at it for a general like trend fall, just to see what the trend is, but I'm not really looking at them like I do on the daily. But here, I didn't have enough of a, here I wouldn't have had enough of a pullback. Well, is this a gap up? No, it was over here. Yeah, here it is. I was looking at the 3rd day. There wasn't much of a retracement from the initial gap up for me to use Fibonacci levels to see if we were getting a reversal down in this area, because that's where I would be looking for first is, can I put Fibonacci levels here? Can I see if we bounce off of the 50% or 618? Can we get something like this?
Yeah.
But that didn't happen. It was too strong for that. That didn't even happen. So the next thing that I would do after that is looking at larger time frames. I would look for a pattern to develop. So I would put my anchored VWAP, and I would say, okay, this is the line that's supposed to tell me when bulls or bears are in control. If the price is above it, bulls are still in control. When does it first get tested? Right here. So I could take a trade upon this reversal long here and manage my risk against this level. And I also have a pattern, which I focus a lot on patterns, even more than indicators. I could say I see a very pretty bull flag right here. I love this bull flag. Look at this. We're having a breakout on the bull flag right after bouncing on a VWAP. You need to be all systems go right here. And then you can manage your trade against that, and maybe you get stopped out after that, but it doesn't mean that you couldn't have day traded it. Maybe you're just using this as a day trade because you don't want to go long on a gap up in a bear market. Maybe you just want to day trade it here for a good 3% move. I mean, that is still could give you some really solid returns. So that's just one way that I don't trade power earning gap ups very much. So I don't have a lot of different ways to trade them, like what I'm showing here. That's just one that I can think of with AVWAPs and looking at the lower time frame, or if there was, if there was data to the left, like pivot levels or something where I could anchor off of that. There isn't anything here. We're kind of in a gap, so there's nothing to use here against that. But that was a good example. I'm glad you brought up Netflix. That recent earnings, and I'm glad you asked that because we're gonna have a lot of tech earnings soon. So there'll be a lot of situations where we can play something like this soon.
Yeah, this week we have, like, I think Apple, Amazon, all the big ones. This is the most important week of earnings season this week.
Oh, you're right. Yeah, there's Apple,
Yeah,
Amazon, Google, Meta,
everyone.
Microsoft, Tesla. Oh no, Tesla already went. So yeah, so
Tesla
everybody
already.
else.
And the beauty of Tesla that it went down, made a doji of this 200, 200, 204, and then so today
Hmm.
or small gap up, yeah, will
Hmm.
close. And you can see, we can also see a potential, I don't know, maybe a double bottom all the way up to 260. If
Right.
really
Nice.
a run, I think 260 and Tesla is much likely to happen. Because you know,
This
Tesla,
it's
everybody's
gonna be a
looking for the
big
next
moneymaker.
Apple. Yeah, everybody's always looking for the next Apple, because they didn't buy, I don't know, many people that bought Apple in 208 or 209 and kept it until today. But in
Hmm.
my opinion, Tesla is the next Apple, you know, doesn't
Hmm.
matter what, but this is my opinion. Not an investment or not any, you know,
Right. No, that makes sense. It'll be much more of a stock pickers market right now with liquidity being lower and the market being a little choppy and having these overall downtrend, but rallies left and right that makes it hard to trend well. So it'll be hard to catch on to moves like we saw in 2020 and 2021 when we had things going our way. We have to be That's where we're going to leverage our skills as a technical and with technical analysis to be smart about where we position ourselves.
yeah, in a tough market, the strong survive.
Hmm.
So what can you tell us about, because everyone makes mistakes and we all make mistakes daily. I can say I've been professional trader for like, I don't know, 5 years now, and this is my main income. And still, day by day, I have this one or two mistakes that is like mentally affecting the rest of my day. So, what are the biggest mistakes that you've made that really influence you to be a better trader?
That's a very good question, and you're absolutely right. Like I said earlier, I'm only right 35% of the time, so I could tell you I make a lot of mistakes, and this is probably how new traders are going to learn the best by learning about our ugly mistakes and not just by seeing a bunch of 1,000% gains in our Twitter posts. So
Yeah,
I'll share a few of the ones that I know that I've made in the past or that I may still make. Entering positions without a proper risk reward setup. Sometimes I would or I do enter a position that just looks too good to be true. I've been following this for a while. It's breaking out, but I know that I'm, 10% away from support and I'm not going to hold it all the way down there because I don't want to lose 10%. So I'm not in a good risk reward position, but I let FOMO win and I'm like, well, this is looking very strong and it's going to rip anyway. So I'll get in. And then sure enough, it reverses and I have to stop out. If I'm doing my job, I'll stop out. If not, I'll sit there and hold it, which is another thing that a big mistake that I made early on as well is this not using a stop loss and allowing things to go far too long, and then by the time you end up selling it, you're down 20% or 25% or something that is just way outside of the bounds of your system. You need to have a system in place that says that I'm going to take this certain risk reward ratio and I'm going to stop at this level so that I only lose this much percent of my account per trade, but I know in the long run it's gonna end up being profitable. Oversizing into positions, like not allowing me to stay in the move because I'm oversized. If I get
yeah,
too big for whatever reason, maybe I've made some bad trades and I'm like, oh man, I'm gonna make it back with this amazing looking setup. And you get in too heavy and it doesn't work your way and you don't give it the chance to breathe that it needs to have just because you got oversized. That's a mistake you
yeah.
could be making. entering too many swing trades in one direction at once instead of like legging into the market, especially when it's choppy like this. We may have one or two good days, and it, getting ramping up too quickly. And I don't want to go from 0% invested to 100% invested in 2 days. That's not what I want to be doing. I want to be legging into it, having things pay for themselves. Getting Mark Minervini says this. He does this himself. He wants to make sure his system is winning before he's in there heavy. He wants to strike heavy whenever his system's working. So there's been many times, especially when I was doing more options and commons, I'd get in too hot and heavy early on, and then we have one red day in the market, and you're all long, and you're seeing your account have this big drain, and then emotions can win the best of you because you're not hedged properly. You're going too much too fast. What else? Like not cutting losses quick enough, not taking profits on a great trade, being greedy. You go in on a trade and you kind of should know where you expect to take your profits, where you should see resistance levels. Holding on too long, especially making the cardinal sin of allowing a good gain or any gain to turn red on you and you selling it for a loss, not even moving your stops to break even. That's bad. That's
Yeah.
really bad. Once you have a certain gain, you should not be taking. I've done that. I really like, which one was it? It was a coffee company recently that moved like 100% in like a week. I don't know if it was Bros or one of the other coffee companies. I took a trade on it. I was up 80% in like 5 days, and I sold it for like a 3% loss a few weeks later. And I look back at it, and I even tweeted, "This is a good spot where you should expect some selling to going on, because this is a Fibonacci level 1.618, and I think that this is where you should." And exactly where it reversed, I could have gotten out with 80% gain in 5 days. Amazing trade, but no, I justified it. I'm like, oh no, well maybe it'll catch it. It'll catch at this resistance, at this support level. Or no, it goes under that. Now maybe I'll catch it here, and before you know it, you're selling it just under break even. That is really bad, and something I've done even recently.
We all done it. Oh, some of us
Hmm.
still do it. The mental side of trading is everything. Once you put your money, the common sense moves aside and your emotions takes place. And we
Hmm.
need to understand it, that we are emotional creatures, and we need to understand and to accept it and not fight it. This is why we understand it now, that stop loss is our best friend in trading, because it's us against us in the end of the day. So stop
Yes.
loss is our only friend in trading that stops us from making these mistakes. It's not like stop loss is only to stop the money loss. It's also stopping us from making these kind of mistakes in the future. So yeah, I can relate to
Hmm.
this 80%,
Absolutely.
100% gains that goes not even break even, goes red, and then it just
Yes.
one take the whole computer, the whole setup, and just open the door or open the window and just, okay, I'm done. I'm
Yeah,
done.
how could I be so stupid? I was so greedy. I knew a lot of times we know where it's a good level to sell, but we don't. And
Yeah,
and and I've watched a lot of interviews with professional traders, some of the best traders, at least on Twitter. And if you look for one common thing that they all advocate in all the interviews, it is always risk management. Always.
always.
That is the number one commonality between all of the great traders. If you want to last, you need to exercise risk management. I have a lot of friends that are really good traders. They fly by the seat of their pants, but they don't exercise risk management. Sometimes they can 3x their account in 1 week, and they can blow it up the next week because they're not exercising risk management. And I wish I could just bottle up their aptitude to make money and be like, look, you're obviously really good at making money. You 3x your account in a week. Take the aspects of your trading that allowed you to do that, but implement some kind of risk management so that you don't do that to the downside. And sometimes those two go together. I'm only making a lot of money because I'm doing really risky things that could make me lose a lot of money. So, um, yeah, risk management, the number one thing that we need to focus on for sure.
Yeah, because in my opinion, this is the only thing that the trader can, can manage. This is the only thing that is under our control in trading. We never know once we put a trade, like the great Mark Douglas, which I recommend
Hmm.
everybody to see his lecture on YouTube. I have it also on my channel. As he says, when we take a trade, something will happen. We don't know what will happen, but something will happen. The price will go up or go down. But the only thing that we can control of is the risk management and to manage the risk that we are willing to take on this
Hmm.
particular trade. That's it. So yeah, I think the best thing that we can take from this talk is, guys, risk management. Know your risk and manage it. That's it. Nothing else.
Absolutely.
So what are the best tips that you can accept the risk management? What are other tips that if you knew 2 years or 3 years ago that will make you a better trader today?
Hmm. Probably, honestly, it's a simple. The simple one is just look to take setups that have a good risk reward ratio so that you're only entering in positions where you know if you're wrong very quickly and you can lose just a little amount of money, and it don't take, you know, trades and out of FOMO. It forces you to only take good setups. So that's why I love this little position indicator tool that is in all trading platforms. I I need to, and it's very easy to see. I need to see this risk reward number say 2.5 or 3 or greater, and only then will I take trades. That little tip there has probably been what has helped me the most as a trader to only take good setups.
Perfect. Sounds perfect.
Hmm.
Yeah. So do you journal your trades? Like, I use, for example, I use Excel. Every trade I take, I put it on Excel, and then once a week, once a month, and of course, at the end of the year, I I look at the Excel and see, and this is how I remember. Especially, I want to remember the trades that went wrong, and I want to understand why it went wrong, because we will have losers. This is, it's a 50-50 chance. You lose or you win. That's it. There's nothing in the middle.
Yes.
Break even. I look at break even as a winning trade. If I didn't lose, I won. It's a good trade for me. Also,
That,
when we lose, but we keep the rules and we follow the rules, it's still good. But do you make any journal on your trade? How do you follow it?
yes, good point. I think that's also that is something that I do, but I need to do in more detail. I do use Trader Sync to automatically upload all of my trades, and it's a very fascinating platform that does all kinds of analytics. And for the longest time, I didn't want to do that because I knew I'm only, less than 2 years into my trading career. I'm not that great yet. So I know the results are going to be ugly. And you kind of want to be this like flamingo that puts their head in the sand, and you're like, well, if I don't see it, then I don't have to face the ugly reality, and I won't have to see how, crappy of a trader I am. But within the past few months, I started using Trader Sync so that I could get those statistics that I need, like I've said, to know what type of risk reward I need to take, to know that I'm only hitting this percent of my trades. And so that, like you said, so you can categorize the loser trades and put attributes on them about what was wrong with what you did in that setup. what did you
Yeah,
do wrong? And then maybe you group all of your losses and you're like, oh, all of them were me taking a bad entry or me trading on a Friday and I don't do well on Fridays or something common about that. And that's from what I've learned. You take all those things that you learn from your own self-reflection by journaling and you make new rules to help you prevent doing that. And then you slowly get better and better as you do that by
yeah,
stopping doing the things that you know are harming you. But I need to do it in more detail. I need to do it every weekend, not every other, every 2 weeks or every month. It needs to be something that you do maybe every day, like just upload them every single day. And it just depends. Like I'm a swing trader. I don't take a lot of trades. I'm not doing too much day trading. I don't have a lot of volume to upload every day to review. Maybe other people do, and they would benefit from more frequent journaling. Whereas I may take a trade every 2 days, or depending on the market and if any of my trades in my focus list has set up.
sounds good, sounds good.
Hmm.
Okay, one last thing before we end. The one thing, the one tip maybe that you want everybody to take from this talk, from this trading talk, what are the one thing that you want everybody to take?
I think the what's going to benefit most traders, especially newer traders that would benefit from my interview, would be to just focus on your risk management, and everything will take care of itself after that.
Yeah,
Um, you I would even advocate for, if you are a very new trader, a lot of people don't agree with this, but start paper trading first and prove that you have even found a strategy that you can make work even without the stressors, the emotional stressors of having your own money on the line. Because what's the point of you losing your own hard-earned money when you can lose fake paper money and prove that you're going to be good enough to trade and have a strategy, have a winning strategy? You should, focus on fewer setups, find your strengths, your weaknesses, find one trading style or setup that you do well, prove that you can trade it profitably over and over again, and then step out and exercise risk management with your own money, and just try to harness the power of compound interest. You're not here to get rich overnight. You're here to accumulate money. Right now, this is a very tough time in the market for a newer person. We are in a bear market. I think if you're newer, you just take it slow, learn. For someone like me that started in 2020, I got to see two very different markets, and I'm actually glad to have this experience, even though it's been painful at times, because I'm learning a lot. I'm compressing a lot into a short time span. And then there's also going to be great opportunities for some long-term investments coming out of this. And we'll be able to say, I was a trading and I saw this IPO breakout and I charted it, and look, it's the next Amazon or it's the next whatever. And so that's a lot of tips, but risk management is the primary
yeah,
one.
yeah. Okay, Javier, thank you very much for taking the time and joining us in this talk. I hope this is the first of many to come. Enjoy the rest of your weekend. It was a pleasure talking to you, my friend. And I'll see you on Twitter. I'll see you on Monday's opening bell. Thank you very
Yes,
much.
thank you so much. Thank you so much, Tamir. I appreciate the invite. I really enjoyed the talk with you, and I'll enjoy interacting with you on Twitter and love your charts. I appreciate it. I hope you have a great Sunday evening.
Thank you. Thank you, everybody. Have a great evening. Thank you.